Hello and welcome. If you are employed, you would get your salary. In addition to that, you would also get social security benefits like Provident Fund, ESIC or health insurance coverage and so on. If you quit your job or when you resign and if you decide to withdraw your PF balance, then in some situations it would be exempt from tax and in other situations it would be taxable. Now in this video we are not going to talk about the tax treatment of PF balance because I already have a different video on this topic. If you would like to know more about it, you may consider watching it. The link is in the top right corner. But in today's video we are going to talk about TDS on withdrawal of your PF balance. This is covered under section 192A of the Income Tax Act. Let's understand what's this TDS, when it's applicable and when it's not. We'll consider practical examples to have better understanding. And in the end, let's see what do you have to do if you don't want this TDS to be deducted. TDS is tax deducted at source. Here, the person making payment is required to deduct tax and pay it to the government. Let's say you are an employee. After some time you quit the job and you decide to withdraw your PF balance. So you submit your application for PF withdrawal on the EPFO portal, that is Employees Provident Fund Organization portal. Once your application is processed, the EPFO would pay you your PF balance. So here the person making payment is the EPFO. So the EPFO is the deductor and you are the deductee. Now, before paying you the PF balance, the EPFO would deduct TDS under section 192A and pay you the balance. The TDS so deducted has to be deposited by the EPFO to the government, which in turn would be credited to your account. This is basics of TDS. To understand TDS under section 192A, that is TDS on withdrawal of your PF balance, we need to first understand the classification of Provident Fund schemes. Here we have employee PFS and private PFS. First, let's talk about employee PFS. Here the employer is registered with the EPFO. If you join such an organization, then 12% of your salary would be your PF contribution. You would be able to avail deduction of it under section 80C if you have chosen old tax regime. Then your employer makes a matching contribution and you would be earning interest on both these contributions. These three, that is your contribution, your employer's contribution and interest on both these contributions together would be your PF balance. Let's now talk about private PFS. Here, a PF trust is formed by the employer and its employees. This is, however, subject to satisfaction of conditions that have been stipulated. As far as contributions are concerned, this is going to be same as employee PFS. That is, you will contribute 12% of your salary, your employer makes a matching contribution and you would be earning interest on both these contributions. Now, both these schemes would be recognized Provident Fund schemes. But the TDS that we are talking about today is actually not applicable to private PFS. To put it differently, this is applicable only in respect of employee PFS. Let's say you have your PF account with one such recognized employee PFS. And after you quit your job, you decide to withdraw your PF. Now, as far as TDS is concerned, in some situations TDS is not applicable, in others it is applicable. Let's now see when it's not applicable. First, if you have rendered continuous service of 5 years. Here, duration of your previous employment would also be added if your previous employer is also registered with this RPF scheme. Second, you quit job because of reasons which are beyond your control. Say because of your ill health or discontinuance of business, that is your employer has discontinued business, or let's say the project for which you were hired is completed and so on. 3. When you join another employer and if your PF balance is transferred from your previous employer to the current employer. 4. when you subscribe to NPS and if your PF balance is transferred to NPS account. In all these four situations, TDS would not be applicable. Let's now see when it's applicable. When your continuous service is less than 5 years and you don't satisfy any of these three conditions. In that situation, TDS would be applicable. If TDS is applicable, let's understand what is the rate of TDS, is there any threshold limit, and when would this TDS be deducted, and so on. For this, let's consider a scenario. Let's say you are an employee of A Limited. After 4 years, you have quit this job and you have decided to withdraw your PF balance. For this, let's say you have submitted your application for withdrawal of PF balance on the EPFO portal. Now, once your application is processed, the EPFO would pay you your PF balance. But before paying, the EPFO would deduct TDS at 10% and pay you the balance. So, we got our two questions answered here. One, rate of TDS is 10% and TDS would be deducted when EPFO pays you your PF balance. To understand this better, let's consider a scenario. Let's say during the period of this employment, your contribution was 5 lakh and interest that you have earned on it is 40k. Your employer has also made a matching contribution of 5 lakh and interest is 40k. So total of this would be your PF balance, which is 10.8 lakh. Now out of this, taxable PF balance would be PF balance as reduced by your contribution, which is 5.8 lakh here. On this taxable PF balance, EPFO would deduct 10% and pay you the balance. That is 58k would be deducted as TDS and balance 5.22 lakh would be paid to you as your PF balance. Now there are two key things to remember here. First, the rate of TDS would be 20% if you don't provide your PAN. So instead of 58k, it would be 116k. Two, there will not be any TDS if the taxable PF balance is less than 50,000. So considering the same example here, instead of 5.8 lakh, if the taxable PF balance is say 45k, then TDS would not be applicable. So we got our third question answered. That is, threshold limit here is 49,999, which is less than 50,000. Now the last part. If you don't want this TDS to be deducted, then what do you have to do? First, if you are in those four situations, that is, if you have a continuous service of 5 years or you quit job because of reasons which are beyond your control, or you have transferred your PF account from one employer to the other, or you have transferred your PF balance to your NPS account, in these four situations, TDS is not applicable. We have just seen that. Then, if your taxable PF balance is less than 50k, even then TDS is not applicable. This is useful for those who have quit their job after working for a few months, or if you are in the beginning of your career, then this might be useful to you. Now, apart from these, is there any other situation in which TDS is not applicable? Let's say you have not completed 5 years of continuous service and you have quit job and reason for it is not something beyond your control. In that situation, is there a possibility that TDS would not be applicable? Yes, there is one such possibility when your total taxable income, including the PF balance, is within the basic exemption limit. Now, in old tax regime, this basic exemption limit is 2.5 lakh and in new tax regime, it is 3 lakh. Let's say your actual PF balance is 2 lakh. In that situation, TDS would not be applicable to you if you have no other income. But for this, you need to remember one thing. That is, when you submit your application online for withdrawal of your PF balance, ensure to upload form 15G or 15H. 15H is for senior citizens, 15G is for others. Now, you can upload form 15G only if you satisfy three conditions. One, you should have PAN. Second, you should be a resident individual. 3, your total taxable income should be within the basic exemption limit. Once you upload form 15G, EPFO would not deduct TDS. So these are some of the situations in which TDS would not be applicable on withdrawal of your PF balance. Now what if your PF balance is more than the basic exemption limit and EPFO has deducted TDS, or let's say you have forgotten to upload form 15G and TDS is deducted. If so, what do you do? You have two options. One is to go for refund and the other is to adjust this TDS credit against any other tax liability that you may have. Now this refund is possible if your taxable income is up to 7 lakh if you have opted for new tax regime, and in case of old tax regime this limit is 5 lakh, and these limits are applicable from 1st April 2023 onwards. But in order to get this refund, you have to first file your income tax return. Your refund would be processed within 10 to 15 days. But to get refund, you'll have to wait till you file your income tax return. If your taxable income is more than these specified limits, that is 7 lakh or 5 lakh as applicable, then you would be able to adjust this TDS credit against your tax liability at the time of filing your income tax return. Another important thing that you need to remember is ensure to provide your PAN when you submit your application for withdrawal of your PF balance to avoid higher rate of TDS, because if you don't provide PAN then 20% would be the rate of TDS instead of 10%, and this 20% rate is applicable from 1st April 2023 onwards. Before that it was even higher, it was about 43%. This is all I have for you today. Hope the video was informative. Thank you for watching.